Hello and welcome to the Review. I'm Andrew Riddle. We try very hard to avoid political issues or just news issues in these videos. That's really not the point of them. What we're trying to do in these is tell you what's going on in the markets and what we think move the markets, and leave the rest of the news to all of the other news sources we know you have available to you. Because of that, we didn't touch Charlottesville last week when we made that video last Monday night. As terrible an event as that was, and certainly as newsworthy as it was, it really wasn't an event that looked like it was going to move the markets. It's tough to talk about last week in the markets, though, without at least touching on that, because the event did take on a new life last Tuesday when President Trump gave what's hard to describe any other way than as sort of an off-the-rails news conference on Tuesday, where, without getting into the details of it, he seemed to come out more or less in favor of Nazis, or at least not particularly against them. The market doesn't care about that, to be clear, as much as the mainstream media sort of tried to tie that to the fact the market went down last week. The market's amoral. The market's not interested in whether Trump likes Nazis or doesn't like Nazis. The market doesn't know good from bad. It doesn't know right from wrong. What the market does care about, however, is certainty. What the stock market is attempting to do is predict what company earnings will be like 6 to 9 months from now. That's really all the stock market does. That's what the prices of stocks tell you today. It's the market's best guess about where these companies will be 6 to 9 months from now. Because of that predictive quality of the markets, what the markets cannot stand is uncertainty, because uncertainty messes with the prediction models that analysts use to sort of come up with this stuff. What bothered the market last week wasn't so much Trump potentially liking or at least not hating Nazis. What bothered the market was the huge split that caused in the Republican Party. Almost every mainstream Republican came out either directly against Trump over the Charlottesville issue, or at least implied they were against him on the Charlottesville issue. So what will that mean for tax reform? What will that mean for a potential government shutdown? What will that mean if we have a real crisis like September 11th or something like that again? The market doesn't really know. And that's what's bothering the market more than anything else. Uncertainty. If the White House and Congress can't get along and they're in the same party, what happens if in midterm election time the Senate swings over to the Democrats, the House swings to the Democrats? We know they're not going to get along with Trump. What does it mean for the economic agenda that the market has been excited about? That's what's got the market worried right now. Can the Republicans come together and get along? And either with or without the president's leadership, can they accomplish things like tax reform? Can they accomplish things like keeping the government from shutting down? These are important issues to the market. And that's really where the market is today. Charlottesville, the event, while terrible, and hopefully we all have similar opinions about it, in and of itself didn't move the markets. Neither did the terrorist event in Barcelona. What scares the markets is uncertainty. And political uncertainty is creeping in Washington in a way that it really hadn't before. The Republicans had more or less stood with Trump no matter what. Charlottesville is the big split that we've seen. And it's going to be interesting to see where we go from here. One of the things we'll be looking for in the coming weeks is whether the VIX will calm back down. The VIX went crazy last week as Republicans began coming out adversarial to Trump's position on Charlottesville. We saw the VIX rise 35-40% even in one day. The VIX, of course, being the typical measure of stock market volatility. That's really the news story in terms of the markets that comes out of Charlottesville. Not so much what happened in Charlottesville, but what's going to happen going forward in terms of our leadership in Washington. There was some economic news last week, believe it or not, lost in all of that. Consumer sentiment was up yet again, according to the University of Michigan, hitting its highest point since January of this year. It's up nearly 10% for the year. I guess that's good, and generally that's certainly good, though crashes do tend to happen when sentiment is very, very high. And at the moment, there's no doubt that it is very, very high. We did get surprisingly weak housing numbers this past week. Housing starts were down nearly 5%, and building permits were down over 4%. All of this, plus the Republican response to Charlottesville, added up to a bad week in the markets. The S&P lost about 0.6%. The NASDAQ lost about the same, though it's worth noting that's 4 weeks in a row the NASDAQ's been down. And the Dow lost almost 1% last week. As for this week, we're looking for new home sales numbers. We're looking for some initial unemployment claims. And probably more than anything, we're looking to see if we'll get a return to normalcy in the VIX and in the market itself. Not really looking for this week to be a huge up week, though that would certainly be nice. But will it be a smoother week? Will we have a week where we don't have the big intraday up and downs that we saw last week? We had points last week. We were down 1% one day and up 1% the next day. Those huge swings are not usually great things for the market. So we're looking for calmer waters this week. We'll see what we get. Started off okay today on Monday. Maybe everyone was out looking for the eclipse, I don't know, but the market was fairly calm today. Hopefully a trend we'll see continuing through the week. Come back next week and we'll tell you how it all went. Thanks for watching.